Hello everyone, Joseph Hastrader here with EWH Small Business Accounting with another business and tax tip for you. And what we're going to share with you in this video is one, what is a pass-through entity? And then two, what are the benefits of being an S corporation? Because a lot of times business owners ask us, should I be an S corporation? So we're going to briefly describe for you what a pass-through entity is, and then also briefly explain to you the benefits of being an S corporation. And then actually from there, if you want to know if you should be an S corporation, you'll really need to reach out to us to ask us some questions so we can learn a little bit about your situation to help you understand whether that's going to be a good move for you at this point of where you are. And that'll make a little bit more sense when we get to the end of this video. So first off, what is a pass-through entity? Well, first off, here's what a pass-through entity is. If you are a single member LLC, you are a partnership LLC, or you are an S corporation, you are what's called a pass-through entity, meaning that those businesses themselves, those entities themselves, do not pay taxes. They file what's called an informational-only return with the IRS. That income or that profit then from the business all flows through to the individual owner or shareholders or partners of that business, and they pick up the income on their personal tax return on the individual level, and they pay taxes on the income there. Okay, so that's what a pass-through entity is. And again, that's a single member LLC or a sole proprietorship. That's a partnership or an LLC partnership or an S corporation. Those are all called pass-through entities. Now, what are the benefits of being an S corporation? Well, first off, to demonstrate that, let's talk about a single member LLC compared to an S corporation, and I'm going to use some very easy numbers to start demonstrating this point. Let's say you're a single member LLC, and let's say you had a profit of $100,000. Okay? In a single member LLC, or in a partnership for that matter, your entire profit of that business is subject to what's called the self-employment tax. Now, what is the self-employment tax? Think about it like this. When you pay someone, right, or you get a paycheck, that person, whoever's paycheck it is, has 7.65% withheld for Social Security and Medicare. Then their employer has to match that 7.65% as well. So if you take both portions of the Social Security and Medicare portion, the 7.65% times 2, you get to 15.3%. And that's what the self-employment tax is. The self-employment tax is the 15.3% that the owner or owners of the business will pay on that profit of the business. Now, in a single member LLC or partnership, the other thing is you only have one form of income to you as the owner. That is the profit of the business. You literally cannot be on the payroll in those entities. So again, you're going to pay the 15.3% on the entire profit of that business. So in the example that we're illustrating here, on $100,000 profit, you're going to pay $15,300 just in self-employment tax. All right? Now, what are the benefits of being an S corporation? Here's what they are. In an S corporation, the first thing that happens is they say you get two forms of income. The first is you can actually be on the payroll and you can take a wage for working, for instance, in the business. Okay? Then from there, that wage will then reduce your profit. Okay? Now, in the S corporation then, the amount of the payroll check that you take or the wage is the only thing that's subject to the 15.3% self-employment tax, right? Because when you take your wage or your payroll check from your business in an S corporation, right, 7.65% will be withheld of your earnings on your half, and then also the business matches that 7.65%, again, getting you to the 15.3. But it's only the wage or the payroll portion or the payroll check you're taking is subject to that. Whatever's left over then of the profit is not subject to that, okay? Now, you still have to pay federal and state income taxes on the profit of the business in an S corporation, just like you still have to pay federal and state income taxes on the profit of a single member LLC or a partnership. You just have to remember that, again, in a single member LLC or partnership, you have federal and state income taxes and you have the entire 15.3% that you're going to owe on all of the profit of that particular business. Okay? That's the benefits of being an S corporation, and that again, you're only going to pay the 15.3% self-employment tax on the payroll check that you take. Now, the logical next question is then, well, how much do I take in wage versus profit? And there's, some general guidelines on that. But to keep that answer short for right now is you have to take what's called a reasonable wage. And there's some guidelines and some rules to help you know whether you're taking a reasonable wage or not. And this is something that the IRS monitors, because literally on the front page of your S corporation tax return, you have to literally put as what they call officer salaries, so how much the owner or the officers of the S corporation are taking in wage, and they can instantly compare that then to the profit. So they do have a way of very quickly examining this. And this is really the point where if you're wondering whether you should be an S corporation, whether this is going to benefit you, or how much you take in wage versus profit, this is really the part where you got to give us a phone call or consult with your tax advisor to know how to balance those things. But those are going to be the benefits of being an S corporation. That's what a pass-through entity is. And we hope that this was another helpful business tip and tax tip for you for today. Thanks so much.